All right, let's talk about dividends today. A lot of my friends that I've talked to have no idea about dividends or why they're important to have in their portfolio. So first of all, what is a dividend? A dividend is a way to return shareholder value. What does that mean? That's a fancy way of saying this. A company makes a certain amount of profit, and they can do one of three things with the profit. One is they can keep the profit, which is exactly what you want a fast growing company to do, because that means they're reinvesting. So the best thing a young company can do or a growing company can do is keep that money reinvested in more hardware or more, R&D or whatever is going to keep that growth churn going. But as a company matures and they have this profit still, and maybe their growth has slowed a bit, it's time for them to start giving back value to customers. So they can do that in one of two ways. One, they can do a stock buyback. And the reason that is good for you as an investor is because if you own one share and there's 1,000,000 shares outstanding, you own 1/1,000,000 of that company. That's the fraction of that you own, right? But if they buy back 200,000 shares, now you own 1 out of 800,000 shares, which means you own a bigger piece of the company, which ultimately should drive the value of your share price up. So that's a good way for them to return it back. But the third way that the company can give you back value is they can actually pay you. So for every share that you own, you get a certain amount of money, which is obviously a good thing, right? So dividends are typically paid out quarterly. They will announce them at their earnings report, whether they're going to do a dividend at all and what amount per share that dividend is going to be. When we look at a finance site, we usually see the dividends displayed as an annual dividend. So this $6 isn't per quarter. This is the total annual amount of dividends that they pay out. That's normally the way that finance sites display it. I point it out because I have seen finance sites such as MarketWatch here showing a $1.50 dividend for Home Depot, while Yahoo shows $6. That's because MarketWatch is showing the last quarterly dividend amount and Yahoo is showing the annual. So just got to be a little bit careful as far as that goes. So just be aware, but you will get paid a certain amount quarterly. And that amount is going to change potentially every quarter. So what can you do with the dividend? So you see that you own a share in Home Depot and they tell you they're going to pay you $1.50 this quarter. Well, you can totally keep that cash. Free to do that. It will be deposited into your investment account as cash if that's what you choose. But actually, the better thing for you to do over the long term is for you to check the box with your whoever you have your shares with, Fidelity or whoever, and say that you want to roll those dividends over into more shares, reinvest them, in other words. So that means that over time, you're going to own more and more shares of Home Depot, and that compounds and can make your portfolio a lot more valuable. So I recommend, if you're a long-term investor and you don't need the dividend money, reinvest it. So the next thing that we need to talk about when we talk about dividends, it's well and good if we look at this and we see a 2.2% dividend and we're happy about that, because think about it. You're going to hopefully make money because the share price is going to go up and you're going to hold the stock for a long time. But if they're paying a dividend too, then it's like double dipping almost, because you get to be paid while you hold onto the stock. So dividends are really cool if you can get them. They essentially add another 2.2% to your return, which is nice. But as I said, we have to make sure that it's actually safe. Sad story for my part. About 10 years ago, I bought GE stock. And at that time, like GE had paid out their dividend for like 50 years. And there was like nothing more secure than GE. But unfortunately, GE ran into some hard times. And about a quarter or two after I bought the GE stock, the dividend they said would never, ever be cut was cut. So you do have to be careful that the company is actually going to sustain that dividend. A few ways that you can look into that. For one, you can pay attention to this earnings per share, this EPS number here. So in the case of Home Depot, that is $11.56. Okay. The dividend is $6. So that means the company is retaining, if my math is right, $5.44, and while they're paying out $6. So they have enough money to do that. If that payout gets closer and closer to that EPS where it's 80-90%, there's a good chance it might get cut. If it's 30%, it's pretty darn safe, right? If this is a little over 50%, Home Depot, they can afford that. Fast growing companies want to pay out less than that. Home Depot, they can pay out that high of a percentage. But if you look over here at my friends at Exxon, Exxon had a really bad year because of the prices of oil, and they're actually losing money at $5.25, but they're still paying out $3.48. I'm not saying Exxon is going to cut this dividend. I'm just saying over the long term, if that continued, that would not be sustainable. So either, again, they're paying out 80-90% of what they take in, or even they're paying out even though they're losing money. That could be a dividend that over time is going to be in danger if the company runs out of cash reserves to maintain it. They can't pay out money they don't have, right? The other way that you should look at if this company is a good dividend payer and are they going to keep paying it out is look at their history and see if they paid it out in the past. So on NASDAQ here, this side, I can pull out a good history of Home Depot's dividend. And not only do they pay out a dividend every single quarter consistently, but they have a history of raising that dividend 39 cents, 47 cents, 59 cents, 69 cents, 89 cents, dollar, and all the way up to today where they're paying $1.50. So if I own Home Depot stock, not only am I pretty confident they're going to maintain it, I think they're going to grow my dividend, which is super important. And by the way, I don't want to pick on Exxon. They have a pretty good dividend history themselves. They don't grow it quite as aggressively as Home Depot, but they do pay out a lot higher percentage. Oh, I didn't mention the dividend yield. This is super important. So the dividend yield is basically the amount they pay out in dividends. So $3.48 for every share you own, and a share costs you $47.88. So if you divide 3.48 by 47.88, you're going to get this, which is basically your return. So 7.34%. If Exxon keeps that dividend up, that's a really good rate of return. You can just hold that forever, and I'd take 7% all the way to retirement. So the last thing I want to mention is what typical stocks pay out dividends. Typically, your oil stocks will pay really good dividends. Your financials, your banks, sometimes your utilities companies, your telecommunications companies. Some of those are the ones that usually pay out the highest amount of dividend. Some of your mature technical companies like Microsoft and Apple will pay a dividend, but your newer tech companies are still growing probably won't. So just pay attention, and you'll notice that sector by sector it differs. Hope this is helpful. Go out and get you some dividend payers. They help your portfolio.